Well, Rachna, thanks very much for bringing us that update, and we'll keep coming back to you as and when you hear more. Now, moving on to what's brewing today, banking tech provider Zeta has raised about $50 million in fresh funding in a strategic funding round, pushing its valuation up to $2 billion. Now, that is a 1.7 times jump from its previous pre-money valuation of $1.15 billion in 2021. Now, its platform enables financial institutions to launch extensible and compliant asset and liability products rapidly. It has supported more than 25 million accounts so far on its cloud-native processing platform and is on track to add another 25 million. So what's next for Zeta? To find out, we're joined by the company's global CEO and co-founder, Bhavin Turakhia. Bhavin, thanks very much, and congratulations on this $50 million funding round. Welcome to Startup Street. Can you share more about this strategic investor, who it is, and the valuation jump by 1.7 times in under 4 years? What really drove this kind of a surge?
Sure, yeah. So it's a strategic investor. It's a Fortune 5 company based in the US, and predominantly we weren't looking out for capital actually. So this wasn't a conventional sort of go out and look for funds like we did the last time in 2021 when we raised about 300 million at the 1.15 billion pre-money. So it just happened to be that there was a strategic investor that wanted to invest. We don't currently have any sort of specific allocation or use of the funds either, but it's going to serve as a sort of a good buffer to add to our existing cash reserves, and potentially some of it towards sort of expansion on investments behind our technology platforms.
Well, tell us more about that, Bhavin. What are these expansion plans? How will you use this fresh capital apart from building your buffers? Are there specific product innovations you're looking at, specific markets you're looking to enter? What's the plan?
Absolutely. So Zeta is currently operating in the US market and in the India market. That's where predominantly our clients are. These clients are generally large banks and financial institutions and fintechs that use our platform to launch credit cards, debit cards, deposits, loans, a series of sort of financial services and products. We can replacing legacy platforms and legacy technology providers. We have, primarily few areas of focus, I would say, in 2025. I think 60 to 70% of the company is going to focus on some really large deals that we've signed in both US and India, working with large institutions. In India, we work with HDFC Bank. In the US, we work with Merrick Bank, Cardworks, Sparrow, and many other sort of large institutions to ensure that we can deliver on the contracts that we've signed and expand our sort of footprint with them. And then about 30 to 40% of the firm's focus is going to be on signing up new logos. We're currently in talks with about 15 different institutions in the US and almost half a dozen institutions in India that are interested in some point in time in the journey of the next 2-3 years implementing Zeta for their customers. And so the goal will be to close about 3 to 5 logos from that set. So these are two areas we're primarily going to be focusing on. And as I mentioned, we were healthy in terms of cash reserves from our last fundraise, which is about 300 million a few years ago. We are fairly clearly on the path getting to break even in March 2026. So we're looking at this being sort of a cash buffer for us.
Well, we'll get to that break-even point in just a bit. But, these 25 million accounts that you claim to have in the pipeline to support through your platform, could you give us details on this? What's driving this adoption, and which geographies are you seeing higher traction in?
So bulk of that is in the US. There's two large customers, one with about 6 million accounts and the other one about 14 million accounts that are currently using competitors who are sort of legacy providers who've been around for decades. And these accounts will be migrated over to Zeta after we finish implementation. And then a few million accounts from our Indian customers and the banks and institutions we work with in India.
Okay. Well, Bhavin, you were telling us that you're about to break even. Give us a timeline of when, because in FY24, your parent company, at least, the profit surged about 5.4 times. Revenue growth was 9.42% or so over the previous year. For Zeta, what's FY25 looking like?
Sure, yeah. So, I think revenue numbers you're quoting are probably for Zeta India, and Zeta currently generates revenue across Zeta US, Zeta India, UAE, a bunch of sort of countries in Europe also. And so they might not be fully reflective of both our revenue and expenses, but we have been consistently reducing our burn rate. We started off with sort of a burn rate was also almost about 60 million. Last year, that is FY25, will end at a burn rate of 20-ish million. And then by the time we get to FY26, which is March 2026, we will actually be profitable a few months before March 2026 already from a run rate basis, and as of March 2026 from a annual results basis. So this next financial year, starting April 25 to March 26, will be the first financial year where we'll be completely profitable across the globe, across all our investments, and then continue to be profitable from there on.
Okay. Well, FY26 is the year then, Bhavin. What next in terms of milestones? Perhaps a public listing in any of the markets you're in?
Everybody's asking that. So, eventually, yes, I think Zeta will at some point potentially look to IPO, and this might be, in India and the US, kind of, depending on what strategically makes sense. But you asked about, kind of more near-term goals, and there's, I think, really three buckets that we're focused on heavily. One is improving or increasing the number of logos that we currently have. We work with about, several dozen institutions, about 5 to 6 really large ones. I'm hoping to add, between 4 to 5 other really large institutions across US and India over the course of the next couple of years. Our goal is to double our revenue from where we are, and our goal is to continue investing behind building our technology platform. So I would say any potential contemplation or consideration for an IPO is at least 3 to 4 years away. For now, we're kind of blinders on these objectives.
All right, an IPO is at least 3 to 4 years away. But Bhavin, before we let you go, what should we say is the biggest shift that we can expect to see in Zeta's business, say over the course of the next year or two?
Sorry, what is the biggest one?
A shift in business that we can expect to see from Zeta in the course of the next couple of years.
Primarily focused on kind of growing our existing client base and incorporating those new 25 million accounts into the platform. I think that's really where the primary focus is going to be.
Well, Bhavin, and we wish you the best with those plans. Thank you very much for your time here on Startup Street. It was a pleasure speaking with you.
Likewise.